Now, a lot of people want to ask me what I should know about stocks. A lot of people ask me my opinion about, how to invest and what are the things that I need to look forward in selecting a stock. How do I know that I'm going to make money investing in stocks? And then what kind of stocks? You have stocks, you have ETFs, you have Forex, you have options, you have spreads. I mean, you have all kinds of ways in which you can invest your money. And there's so many organizations that are willing to trade your money, like Scott Trade, Bar Chart. You have so many other ones out there, and then they all offer, they're all individual, fees and prices. But if you really want to learn about stocks and you really want to learn about futures and commodities and how to trade, you have to ask yourself one basic question. And that question is, what kind of investor are you willing to be? Are you going to be a value investor or are you going to be a growth investor? And there's a big difference in the two. Because if you're dealing with being a growth investor, then you want to look long term. You want to look long term and you want to have long positions. You're not in it to make money, but to have a safety net for monies for tomorrow or for the future. Okay, you're not going to be the type of investor, if you are a growth investor, to look at the market every single day and see if you're making money today or if you're not making money today. No, you're going to be looking at more of a permanent sustainability that comes with earnings per share of a particular stock. And if that's consistent by examining the analytical quarterly data, and you can see the earnings and the sales, and if they're going up and if they are advancing, usually about 15 to 20% for it to be a growth stock, then you are on the ballpark or on the mark, and you're safe. You're safe because, as long as the company that you are investing in which you have stocks, has a growth, an annual percentage growth of at least 20% or better, then that qualifies for a growth stock. And then you can pretty much increase your money over long term. But if you're the type of person that wants to invest today and liquefy short positions, then you're looking for value investing, in which you look towards weak companies that don't have a yield above 6%. 5% or lower, it usually qualifies for a value stock. That means that you are going to be swing trading, or you're going to be weekly trading or daily trading based on the trend going up or down, and then you're going to see in which direction the stock is going for a particularly new company or a company that's insolvent. More money that you make or the projected earnings that can happen year after year is always better if you have more than 20%. But then again, if you are a value investor, which is the opposite of a growth investor, you're not looking for the long-term positions. You're looking for the short. And depending on your style, if you want to do it because you want to liquefy and you want to make money because of the up or down trend of the stock, or because you have other vested interests, the value investor is more interested in making money in the here and now versus the growth investor who's looking for, let's say, a retirement and the future hedge funding of what the price action dictates in the present, assuming that it's going to be higher in the next coming years based on the market action today, is how the price targets are calibrated through valuations of the stock to determine what will be the profitability for tomorrow. But we're talking about growth stocks, and that's, it really depends on what kind of investor you are willing to be, And once you decide which one you're going to be, you have to then also decide what strategy, what plan you're going to put in place to be consistent, and not lose money through the fees, through the prices going down, and you're putting short position for a particular price target and then not meeting it. I mean, there's so many ways that you can lose money, but there's a lot of ways that you can make money too. But you really have to have a plan put in place. You can't wing it. And I know a lot of people that make a lot of money when they wing it in the stock market, but they're taking really, really, really big risks. And unless you got the money like that you can take that kind of risk, then go ahead and do it. But if you don't have that kind of money to take that kind of risk, and even if you do have that kind of money, it really helps to have a plan in place and have stop and call signals in which you can buy and sell a stock. Now, that's my opinion outside of Larry Levine, and I can give you some more opinions once you decide that this is what you want to talk about. All right?